Okay, let's just dive right into this. You know, when you first pull up a financial chart, it usually looks like, well, pure chaotic noise, right? But here's the secret. The market actually moves in these highly predictable waves. And as it moves, it leaves behind what we can call structural footprints that we can literally track. So, in this explainer, we're going to learn exactly how to read those footprints using trend lines. And our absolute biggest goal today, explaining these market concepts in the simplest and most understandable language possible. No fluff, just the facts. First up, we have to ask a kind of painful question. Why do so many amateur traders lose money when they're just drawing simple lines? Well, it usually comes down to one massive myth. Beginners often treat a simple straight line on a chart as this magical concrete barrier that the market absolutely must respect. But as you're going to see, the market, it really doesn't care about rigid walls. To understand how the market actually moves, let's just strip away all that intimidating Wall Street jargon for a second. When you hear traders throwing around terms like swing highs and swing lows, they are really just talking about the extreme tops and bottoms of the market steps. Just think of it like walking up or down a mountain. The swing high is the peak right before you rest, and the swing low is the valley before you start climbing again. It's really that straightforward. And figuring out the trend direction is honestly as simple as looking at a staircase. An uptrend, that's just a staircase going up. Every peak and valley is higher than the last one. A downtrend is a staircase going down. Each step drops lower. So, drawing a trend line is literally just taking your virtual pencil and connecting the edges of those stairs. Okay, so how do we actually draw them correctly? Just stick to these 4 golden rules. Number 1, make it obvious. If you're squinting at your screen to see it, it's not a good trend line. Number 2, maximize your touches along that line. Number 3, and this one is absolutely vital, treat the line as a flexible area or zone, okay? Not a concrete wall. And number 4, never, ever force it. We use these lines as a handy guide, definitely not as the absolute law. Now, this brings up what is probably the absolute most common beginner question out there. Do I draw the line touching the thick body of the candlestick or those thin little wicks? Well, the simple answer, it absolutely doesn't matter. Your only goal, your whole mission here is to connect the greatest number of touches regardless of what part of the candle it actually hits. So, the crucial point here is summarized perfectly by this quote right from our source material. We don't enter trades just because the price touched a trend line. You see, professional traders would never blindly buy or sell just because the price bumped into a diagonal line on their screen. A line all by itself, that is just not enough of a reason to risk your hard-earned money. Alright, let's get into the strategies. Strategy number 1, riding the wave, also known as the continuation strategy. If you want to ride the waves safely, you really need to understand this specific term, an area of high convergence. Now, I know that sounds super complicated, but keeping in line with our goal to explain things simply, it's really just a busy intersection. It's a specific spot on the chart where multiple clues, like say a horizontal support level and a diagonal trend line, cross paths. And because multiple clues are meeting right there in that one spot, you better believe a lot of traders are watching it. Let's break down how to actually trade this intersection into 3 super simple, actionable steps. Step 1. Find the primary moving trend. Are the stairs going up or down? Step 2. Spot that busy convergence zone where your lines cross over. And step 3, which is without a doubt the most important part. Wait for the market to give you a clear signal right there at the intersection. But here's the catch, guys. You must wait for confirmation. Seriously, don't just jump blindly into traffic. You have to wait to see how the market reacts inside that busy intersection first. What you really want to see is strong vision. Ewell proof like a massive candlestick, completely engulfing the previous one that proves the market is actually respecting your zone before you commit to anything. Moving right along to strategy number 2, spotting the U-turn, the reversal strategy. Okay, the absolute biggest question here is what actually happens when the trend line breaks. A beginner usually sees the price snap right through their carefully drawn line and immediately jumps to the conclusion, the trend has changed. Time to trade the other way. But is it really that simple? No way. You have to beware the fake out. A simple line break is very often a trap. The market absolutely loves to briefly poke through a trend line, almost baiting those eager amateur traders who are just desperate for a quick entry only to suddenly reverse and continue right back along the original trend. So, how do you avoid this trap? Well, professionals don't just blindly trade the break. They wait for specific footprint patterns to form right before the line breaks to actually confirm that the U-turn is real. They're scanning for very recognizable shapes on the chart, things like double tops, double bottoms, or head and shoulders patterns. Let's zoom in and look a bit closer at one of those, the double bottom. Think of it in simple physical terms. The market is trying to push the price down to make a new step, but it hits a floor. It bounces, it tries again, and it just completely fails to go any lower. It literally draws out a W shape on your chart. And that right there, that is the market's physical proof that it is entirely running out of downward steam right before it breaks your trend line. Which brings us to our final thought for this explainer. I want you to look at your own charts and ask yourself honestly, are you forcing your lines on the market, just crossing your fingers and hoping for a magical barrier? Or are you patiently watching those footprints, finding those busy intersections, and letting the market organically draw the lines for you? Mastering that one simple mindset shift, that is exactly what separates the amateurs from the pros.